Welcome to Monday Night Live, the weekly training that guides professionals to financial prosperity. Join our community and let's start building your wealth.
Guys, welcome aboard to Monday Night Live again. Welcome to all the guests, also guest students, Tom Wall. Hey, Tom, I think was it your birthday the other day, Tom Wall? See that he's
Yes,
on it.
yes, sir.
Happy birthday.
Thank you.
Yep. Hopefully all is well at home with you.
Thank you.
Yep. Okay. So guys, tonight we're gonna let Kaaren teach. Primary subject is self-directed IRAs, but there's more to it than that. Um, and I want you guys to really take notes, pay attention, because this is the kind of thing that you can share with your clients and think about where we are in the time of year. Here we are, 2 days away from November. So people are starting to think through what can they do by the end of the year to um, increase profit and minimize taxes and basically have the best structure possible heading into the new year. It'll go on easily into the April 15th, but I know the IRS gives us certain latitudes in January. So it's a perfect time of year to be talking about this and for you to learn about it. You can use it for yourselves and also for your clients. So Kaaren, go ahead and feel free to jump in here. And if you have anything to share, audio visual, feel free to do that. And Andre and I will keep up with the questions for you.
I sure do. Okay, no finger puppets though, just PowerPoint. Here we
Okay.
go. Let's try this. So I'll do the slideshow from the beginning. There we go. So this is what I'm going to be talking about tonight, self-directed IRAs. And I'm sure that a great number of you know what they are, but I'm going to go into some of the details and also how you can use just this really awesome tool to raise capital for your deal. So who's raising capital? You want to raise your hand there if you're raising capital. You can just push that little button. Do you see that button? It says, let you do like emojis or something. Well, if you already know what they are, great. But please put all your questions in the chat and I'll get to all of them. All right.
Okay.
So I'm Kaaren. I'm the CEO of UDirect IRA Services, and what we do is help you to basically take your retirement from where it is, move it into a self-directed retirement account, and then invest in alternative assets outside of Wall Street. And again, also you can use these accounts to raise capital from other people. So this is what we do. We don't offer tax and legal advice, but we get super close. So we do work with a lot of CPAs and attorneys who can also give you really great advice. The whole point of the IRA, just baseline, is to save for the future. So always keep that in mind when you're using a retirement account. It's for later. It's not for today. And that will really help you have just the number one baseline rule of what these things are. It's a retirement savings vehicle. But there is just this huge deficit between what we have and what we need as a country to retire. Like if you had $100,000 thinking that was going to be plenty, because for some people, they think that'll be enough, but just consider that you're going to be living longer. So if you're 59 and a half and you know you're going to live until you're 86 and a half, then you'd only have $400 a month, assuming no gain or loss. So you really, really need to save for retirement. Just absolutely crucial. And the self-directed IRA vehicle lets you choose non-correlated assets, not correlated to the stock market. That's what's great about it. So about $40 trillion in this retirement pool. Isn't that nuts? A lot of it is in IRA money because as people over the past decades have lost their jobs, that 401k money gets rolled over into IRA money. So more IRA money really than employer plans. And there's still a lot of money in pensions and things like this. But as you can see, the bulk of it really is in IRAs. And altogether, it's about a $40 trillion pool with only about 3% being self-directed. So a lot of people don't know about this. It's kind of like a best kept secret. If you haven't heard about it, don't feel bad because a lot of people haven't. Even tax professionals and legal professionals haven't heard about it. But these have been around a long time. Ever since Gerald Ford signed the ERISA Act into effect in 1975. So going on 50 years. of being able to self-direct your IRA. So what the ERISA Act did is create the IRA. And whether or not it's self-directed wasn't really delineated. It isn't delineated in the eyes of the IRS. What makes a self-directed IRA account a self-directed IRA account is the asset that is in that retirement account. So not the stock market, but instead non-market correlated assets, alternative assets, real estate, private equity, crypto, whatever, loans, tax liens, mobile home parks, self-storage. Lots and lots of different kinds of alternative assets can go into a self-directed IRA. Like you call your person at TD Ameritrade and say, hey, I'd like to take my IRA with you and invest in a note fund. And they'll say, well, you can't do that. But the truth of it is you just can't do it with them. And they might even call what they have a self-directed IRA. What that means, all that it means is that you can choose the stock, bond, or mutual fund you want to invest in. But a truly self-directed IRA, like the ones UDirect IRA offers, those can invest outside of Wall Street. Okay, so that's the difference. It's always great to talk about the end, beginning with the end in mind. And this is to say that you need to make sure you do your due diligence. It's easy to open an account, easy to get it funded, no problem. We'll get the money out, invested for you. But what takes the most time and the most of your effort is choosing the asset you wish to invest in. When you open a self-directed IRA, the money is there waiting for you to select an asset. So how do you do that? I mean, that's a good question. One of the ways maybe is, talk to people like Gary. Hey, Gary, well, I'm thinking about doing this. What do you recommend? Talk to your friends, go to meetup groups, do your research online and find asset classes that you like best. Some people like tax liens, for example. Some people, I don't know, they like to take their money and lend it to others. So lots of different things you can do. When you're choosing that asset, you need to do your due diligence. And we all know this, right? But I mean, it's just really super crucial here because if your IRA loses money, you don't get to write it off when it's in a retirement. It's not deductible. So good to keep in mind. Lots of different ways you can do your due diligence. Mostly just start talking to people and Googling the people you're investing with and really get down deep into the asset so that you can understand it. If it's real estate, does the person who owns it, do they act, the person who's in, selling it or having it, do they actually own the asset? Do a title search and check and see if they actually are. Look on the FINRA website, FINRA. It's the enforcement arm of the SEC, the Securities and Exchange Commission. They have something on the FINRA website called Broker Check. And if that broker dealer has any dings against them, you're going to find out. You really just need to do your homework first. So when you're investing with an IRA, there are limits, but not very many, just two really. That your IRA can invest in anything, any asset, except life insurance contracts, okay, and collectibles. Collectibles could be coins, although you can invest in precious metals. There's a difference, has to do with the purity of the metal. No fine works of art or anything. So life insurance contracts and collectibles, but also your IRA does not invest as an equity holder in an S corporation. And that's only because S corporations don't allow non-human entities to be equity holders. So S corps, life insurance contracts, collectibles, everything else is okay. But that also depends upon the custodian and what they find to be administratively feasible, the assets that they're willing to hold. So what if your funds, you think, well, this sounds great, but your funds are with your current employer? What happens then? Pretty much, or I should say too, what if this is your investor and somebody wants to invest with you, but their money is with their current employer? They pretty much have to wait until they leave the service of that employer until they can move their money. If they have a 401k, there's a chance at something called an in-service transfer. They're working there, they're in service, and they want to move their money. So they just go to their plan administrator and ask, does the plan document allow for an in-service transfer? And if they say yes, they can move all the part of the money and they'll help you with that. So I want to talk about the rules, the self-directed IRA rules, because you just really want to have a successful experience when you're self-directing. So it's really great to, know the rules of the game, right? So the rule book, one of them is on the IRS's website, irs.gov. So if you want to jot that down, irs.gov, or even Google it while we're talking here, and look up Publication 590. This is a great publication. It's 590A for how the money goes in, 590B for how the money comes out. And it really outlines all the rules for the traditional and the Roth IRA, our two most popular account types. Okay, so you don't borrow money from an IRA. You can borrow money from a solo 401k because it's not an IRA. You don't sell any asset that you personally own to your IRA. The only thing you can contribute to a retirement account is cash, not non-cash assets. Good to know. Your retirement account is not collateral for a loan, and you don't use it to buy assets, property, whatever, for personal use, present or future. So we'll explain why here as we go forward. It's because some people are disqualified to your IRA. What does that mean, right? Disqualified. Well, I'll explain it. It's your ascendants and descendants, right? Your parents and grandparents and their spouses, you and your spouse, and then your children and grandchildren and their spouses, disallowed to the IRA, all right? Plus somebody who's a fiduciary or somebody who's a 50-50 business partner. But the qualified people, they're out to the sides on the family tree, like your aunts and uncles, maybe your nieces and nephews or your brothers and sisters are okay to invest with. So it's not enough to say your IRA can't do business with family members. It can, it just is where they sit on that family tree. So this is the crux of the matter of the rules. Prohibited transactions is a game of keep away from prohibited transactions. Neither you nor any of these other disqualified people can have benefit of the IRA today. It's all for the future. And of course, you don't buy, sell, or exchange assets between the plan and any of these disallowed people. And a disallowed person can't offer what's called services to the plan. We'll get calls a lot of times from asset sponsors, and they'll say, hey, I've got a fund. I want my IRA to invest in. Well, that would be a prohibited transaction because you are disallowed to your IRA. And if you are the fund manager, you're providing services to that asset. And that would disallow you, and that could cause a prohibited transaction. Because these prohibited transactions are confusing, or they can be, this is why we always offer people at least a free 20-minute consultation. Call us, talk to us about your deal. We'll say, who are the principals? What's their role? You know, who is related? Are there any related parties? And we want to listen for the prohibited transaction, and we'll let you know if we hear that. So a little bit about the rules now. Who plays the game? First, there's the account holder, most important person in the deal. That person, that account holder, could be you, could be your investor, but they're driving the bus. They are choosing the asset. The IRA, the self-directed IRA, that's the tool that they're using to invest. And then there's UDirect IRA services. Yay for us. I'm the founder of the company, kind of, partial. So when I founded the company in 2009, I searched and interviewed trust companies and banks to find an alliance to hold our clients' money. And so we work with American Estate and Trust Custodian. So these are the players in the game. So that's good. It used to be more common for us to invest in real estate using a self-directed IRA. And by real estate, I'm talking about physical real estate, the house, the multifamily directly. And of course, we've got a different market right now with higher rates and different scenarios, but your IRA can still buy real estate, absolutely, or any other of the assets that we've covered. So the upside about using an IRA is that any of the gain that comes back, like rent, or maybe it's a payment back from a loan, comes back into the retirement account, either tax-free in a Roth or tax-deferred. So that's the golden or the brass ring or golden ring right there, because you've got the potential to earn more money because you're going to be compounding faster. The money goes in, not diminished by tax, and all of that money could go back out into your next deal. There's no time limit to how long you have to hold the asset. But like there can be when we personally own real estate, there's a clock ticking for tax. But and also an IRA can borrow money, which I'll talk about here in just a minute. The downside about using an IRA to purchase, especially real estate, is you don't get the same tax benefits that you get when you personally invest in real estate outside of that tax-protected bubble of the IRA. So keep that in mind. But there is, no tax advantage really to owning real estate like you typically would. But the greatest thing is that maybe you find a deal, you really want to take it down, you really want to grab that deal, and you don't have the money personally, or maybe you don't qualify for a loan, but your IRA could get that deal. So that's a lot of times when people choose real estate as their asset of choice. And I mentioned that an IRA can borrow money, and here it is. Part of my background includes being in the mortgage industry for several years, in the loan servicing industry, and then in the origination portion of it. So I was kind of surprised when I learned that an institution would make a loan to an IRA account, but they will. It's kind of a commercial loan. It's called a non-recourse loan. And so what this means is that if the IRA were to default on that debt, the lender can only come against the subject property, not against you personally, and not against any other assets that you own or your IRA owns. So that's great. It's only the subject property. But the thing is, there aren't a lot of lenders to choose from. We do have a list. If you would like a list that we've created of non-recourse lenders, I'd be happy to share it with you. It's not necessarily a list of people we endorse. It's more just for your convenience. So you can shoot me an email, info@udirectira.com, and I'll shoot you that list of non-recourse lenders, no problem. But they're going to require more money in the deal. If your IRA wants to borrow money, say for real estate, you don't go to a bank like Bank of America or something and take out a mortgage. It's not like that at all. If you were to do that, say to buy like your own primary residence, you probably borrow 95% and put 5% down, for example. It's flipped with an IRA. The IRA comes in with more equity and has a smaller loan. All right. And of course, because you are disallowed to the IRA, it would be a prohibited transaction for you to personally guarantee the loan to the IRA, because then you would be offering personal benefit to the plan, and that is a prohibited transaction. So you could get a third party if they wished to, basically underwrite that loan. But there's just this big caveat. When your IRA uses leverage to acquire an asset, there is a special tax. It's not income tax. It's UDFI tax, unrelated debt financed income tax. So in a scenario like this, say you've got a property and it's $100,000 and you've got $70,000 in your IRA, you borrow $30,000. Here comes $1,000 rent check. Well, your IRA earned that $1,000, $700 of it because of savings, but $300 of it, your IRA didn't really earn. It's because of leverage. So it's that 30% of the proceeds that are subject to this tax. And it may not be a big deal to you because your tax advisor may be able to write off, expenses. So you just need to begin with the end in mind, check it out, talk to your tax advisor. So that's for debt, when an IRA takes on debt and earns profit. There's a different kind of cousin or twin tax called UBIT, unrelated business income tax. This occurs when an IRA invests in an active business. When I very first started the company in 2009, an active business was flipping, and people were flipping like crazy. And flipping is an active business, and it led to UBIT, unrelated business income tax. So read more about this before you get started. Again, the website irs.gov, and it's publication 598. And both of these taxes, again, are reported on a form 990T. Just like if you run a charity, or if you work for a charity or on a board or something, that charity has to file a 990T too. It's for tax exempt entities. So that's how you pay that tax. Okay. So how do you get an asset into an IRA? I mean, we've probably all of us, I think, have bought real estate in the past, and we know how to do it. It's pretty much the exact same process, except now the money's coming from the IRA, and maybe a non-recourse loan. So the process is first to get an account open and funded. We have a lot of people say, oh, I found a property, and they have no account open. So it's the account, it's the IRA account that is the investor, not the person. So your account can invest. You can't acquire that property until your account is open. And you can't send out an earnest money deposit until you funded it. And that could take around 2 weeks at the top to get another custodian to move the money in. So remember, the IRA is the buyer. Give us the supporting documentation, which would be like the offer to purchase, or if it's precious metals, an invoice. If it's a note, you give us a note. If it's secured, maybe a deed of trust, the security instrument, whatever the documents are for the deal. You give us those documents, we review them, fund, record if it's real estate. And then if it is property, your tenants will move in. They make their check payable to the IRA, to your IRA, never, ever, ever to you personally. If an asset sponsor ever makes a check payable to you personally, that's like red flag. Send that check back to them and say, no, make it payable to my IRA. Because if an asset sponsor made these proceeds payable to you and you cashed it, then you just burst that tax protected bubble of your IRA and it could all become taxable to you. So it's very important that you follow the rules. And again, you know, if you're confused, you don't know what the rules are, call us. You know, we want to talk to you about that. So I want to talk about an example when there's an exception to the rules. Here we have a father and a son, and they want to invest together. Well, this is the exception. In this case, dad is going to buy the house using cash, and the son's going to come in using an IRA. That title will vest as tenants in common. That's how it's going to look. Yeah, they're disqualified to each other. This is the exception. As long as neither one of them had an ownership interest in that property, they can invest concurrently. Their names will record concurrently on title. It's because it's a new deal. So after the deal, neither one of them can ever buy each other out. They can never stay in the property. None of their ascendants or descendants could ever live there or have any use at all. And so that's the rule. After the deal, they're not going to buy each other out either, because a disallowed person can't buy an asset from your IRA. Now, here's how it works with expenses and proceeds. It's split pro rata. And in our example, pro rata is 50-50, but it could be 70-30, what have you. But expenses and proceeds are split according to the ownership interest in that property. The thing about self-directed IRAs, super important to know, is that all expenses of the IRA asset have to be paid for by the IRA. So what you want to do when you have a self-directed IRA is leave idle cash in the account so that you have money to cover these expenses. Now, we all know real estate has expenses. It just always does. But here's something that's come up recently that we haven't seen, and that's because the rates are higher. So when people invest in private equity, which is the #1 asset class for self-directed IRAs, what's happening now is a lot of these private equity deals have debt that's maturing, and now that has to be, re-upped. But of course, it's going to be at a higher rate, and we are seeing a lot of capital calls. So when there is a capital call, that money has to come from the IRA. So if you have a shortfall, you don't have enough IRA money to pay for that capital call or whatever the expense might be, what can you do? You can, first off, you can make a contribution from your own checking account, depending upon your age, your account type, and your income. You could liquidate other assets within the account. You could roll over or transfer assets from another retirement account into this one, or bring on a debt partner. And if you can't pay the expenses, you could liquidate the asset and just sell it. But that's how you would take care of it if you ran short. So we're going to change gears here and talk about a tool that your IRA can use. You may have heard of it. Sometimes it's called a checkbook IRA, sort of a jargon term. What it really is an IRA-owned LLC. So here's what happens. You have an IRA, self-directed IRA, that's open with money in it. Then you have a third party create a special purpose LLC, special language in it, saying that it's for this IRA. So the IRA buys 100% of the initial units of that LLC, right? So now the IRA owns the LLC, and the IRA funds the checking account of that LLC. So the IRA owns this LLC. The LLC is an asset in the account. But if you have that checkbook IRA, now you're writing the checks. If you have one of these tools, it's like with great power comes great responsibility, I love to say, because you have to follow all of these self-directed IRA rules and know them as well as I do so that you don't commit a prohibited transaction. Good rule of thumb, the money in an IRA-owned LLC should only be used, #1, to acquire an asset, or #2, to pay the expenses of that asset. That's it, okay? That's it. We talk about self-directed IRAs, but it's an umbrella term, and it really does cover a lot of different things. It covers the individual K, the solo 401k. It covers the traditional Roth, SEP, simple, spousal inherited IRAs. And we at UDirect also offer the self-directed HSA or Health Savings Account. So all of these are self-directed plans, and they all have the same rules that we've been talking about today. But just know that yes, you can self-direct a traditional, yes, you can self-direct your SEP IRA, all of these different accounts you can self-direct. So how do you do this? Right? How do you self-direct? Pretty simple. You open an account, real easy, fill out a form. You fund the account by transferring money from an IRA, rolling over money from a previous employer plan, or contributing, right? So now the account is open, it's funded, and to invest, you give us a direction of investment, which gives us permission to move the money, and the supporting documentation, like the contract. We're going to review it and fund it, then you've self-directed, and all the proceeds from your IRA-owned asset must go back to the IRA that owns the asset. Super important. So if your IRA owns that asset, that's where the proceeds go, and never to you personally. I think you know that.
Mm-hmm.
So I've gone over these concepts quickly. I'm very happy to go deep on any particular topic, but if you'd like to take a screenshot here of my contact information, I'd be happy to answer any questions there too. And again, I'm offering this a list of non-recourse lenders. You can email us at info@udirectira.com. So with this, do you want me to take the questions, Gary?
Yeah, go ahead. I know there's one just came in from Kathy, and I've got a couple myself, but let's go ahead and start with the students, you know?
Okay,
Yeah.
Dutch says, how do you suggest finding these people? Do you have mixers and trainings? Yes, we do. But the way you find somebody who has a self-directed IRA, it's just not that hard. To be able to be an investor using a retirement account, somebody pretty much all they had to do is have a job. It's a very low barrier to entry. If somebody's had a job and rolled over a previous employer plan once, they could move that money into a self-directed IRA and invest with you. So anybody with a retirement account right now, because to contribute to a retirement account, all you need is, again, active income from a job. So that's how you find people. You just ask them, hey, do you have an IRA or do you have a 401k from a previous employer? They say yes, then they might not even know that they could do this. And you could be, their saving grace there and help them and invest in a good deal that builds their retirement. Okay, Catherine asks, what's the best way to protect your funds when the owner dies? Okay, an IRA is like a trust. When you open an IRA, you name beneficiaries. So if you were to pass away, those assets in your IRA account, they don't go through probate. It just simply passes on to your beneficiary. We don't even open an account if there's no beneficiary. And if you want to name a trust as a beneficiary, that's something to discuss with your trust attorney. You can name a charity as your beneficiary, but when you die, your beneficiary receives your funds, and that is a way to protect in the event of death. I hope that covered it for you, Kathy.
Okay. Now, as far as you're saying anybody that has a job with income, it doesn't have to be a W-2 job, right? It could be like a lot of us realtors, we set up S corps to the commissions run through the S corp, and then S corp pays us, that kind of thing,
Yeah, absolutely. Yeah, it just is active income. Like, what would your accountant or tax preparer consider to be taxable active income? And that's the answer. So yes, for any income from a job.
Okay. And just a follow-up too from Kathy's question. Let's say the person who set up the IRA, passes away, and the assets in the IRA, there's a beneficiary named, or you wouldn't even set up to begin with.
Right.
But there's a benefit to the assets transferred to the beneficiary in the IRA. Okay, gotcha.
They do. And to say there are two beneficiaries or multiple beneficiaries, each beneficiary would get their pro rata share according to the way that the account holder set it up. So we'll say, all right, who are your primary and contingent beneficiaries? And then what percentage do they get? So the account holder determines what percentage each beneficiary would
get. Yeah. And then I've got a question on, like I know we said earlier, you can't borrow from your self-directed IRA, but yet the self-directed IRA can hold a note. Or if the self-directed IRA can loan, it could be what it's like an asset, but it probably can't be disqualified person, I'm guessing. Is that, am I on the right track or?
Then you are exactly on the right track. So a
Okay.
solo 401k can be self-directed. It's a 401k, and you can personally borrow money from a 401k.
Yeah.
You can borrow 50,000 or 50% of the account value, the lesser of those. So you can borrow from a solo K, but you're right, you don't borrow from an IRA person. And you know, yeah, you've got it exactly right.
Yeah. But let's say Kathy was she had a self-directed IRA that had liquid cash in there. He could loan that money to another investor, and the interest coming back is comes back into the IRA. So it's like she's utilizing her capital.
Right.
Um, any restrictions there at all? Is it
No, not really. I mean, I would just say that make sure that the interest rate is a market rate, whatever the current market is, so that it doesn't look like you're giving favoritism. And
right?
if it's a note, if you can secure it against something that might reduce your risk, probably need a security instrument like a mortgage or deed of trust or something that secures the note. So secured notes, people love those in self-directed IRAs.
Gotcha. Okay. Now, guys, go ahead and type in your questions. I've got another one here. So I know one of the slides may have confused people, and it said the a property inside the IRA doesn't receive the same tax benefits as a property investment property outside the IRA. And I guess what you mean by that is outside the IRA, we can take depreciation and
Yes.
we have lots of other expenses, but inside the IRA, obviously it's the property is growing relative essentially tax free, right? So that's is that why you don't get like depreciation and
Yeah, that's exactly right. So if you're not going to
yeah,
pay tax, there's nothing to depreciate, right? So you're not paying tax, so you don't owe any tax, so you don't need to calculate depreciation. That's exactly
right?
it. Yes.
Okay. Are there any other expenses that a property inside the IRA would not be able to realize, like that you would be able to realize outside the IRA? Is there anything other than
I mean, any
depreciation?
benefits like that besides, I would just say, and any normal tax deduction you would take on real estate, you're not going to take within the self-directed IRA, because the benefit that you get with the self-directed IRA is that the proceeds are tax-free in a Roth or tax deferred.
Gotcha.
You kick the can down till your retirement age.
Okay.
I see
Okay,
Tony has
good.
a question.
Yep.
A property secures the note, correct? Yes. If you're lending money on real estate, you can also like have a first or second lien position on that property, or third or whatever you agree. You know, again, it's self-directed, so you're making this deal happen. But it's your IRA as the investor. So yes, absolutely, you would have mortgage or deed of trust securing the loan.
Okay.
So Kaaren, you've got a question?
I do. All right. So I have a self-directed 401k, which is just a little bit different, of course. But I know a lot of people with the self-directed IRAs, and also people who ask a lot about self-directed IRAs. And the question that comes up frequently is, how much does it cost? You know, the yearly fees. So there's especially, with investors like the idea of the 401, of the IRA, the self-directed IRAs. So you know, you're a different company, of course,
Yes.
than people around here use. So do you have any like schedule of fees or anything like that we might be able to share with our customers or
Sure, I
our
just put this in the
we work
chat.
with?
And I think what people like about UDirect IRA services is that our fees are very reasonable. We're not nickel and diming you. It's a $275 flat fee annually without a kick. You know, they'll say
Yeah,
some will
because
say
some
like,
of the companies do
yeah,
nickel and dime people.
yeah. And then we have fees if there's a bounce check or you want something FedExed or there's some extraordinary like service over and above. But you can see that our fees are very simple. $50 setup fee, $275 a year. We ask you to leave a $325 minimum balance. It's not a fee, but just leave that much cash in your account if there was a fee. Our wire fees are only $15. So yeah, we're very reasonable. And that means you get to keep more of the money that that your assets earn.
Right. And the other question too, I think the other thing that comes up is how able is somebody to talk with somebody in the event that they need to talk with someone. So that's another thing that comes up.
Yeah, we're very available. I have a great staff. So I'm going to type, if you email us at this email address, info@udirectira.com, someone will reach out to you. You'll talk to somebody, usually within a couple of hours, but same day, never outside of 24 hours, unless somehow your email got lost in the ether. So, we're very, people really love us. You can go to Google and read our reviews. We have a lot of really great reviews.
Thank you.
Yeah.
Appreciate it.
Hey, Kaaren, another thing that will likely come up in discussions, I know when I first learned about this was probably 20 years ago, and I was blown away. I didn't realize that this was even possible. It turns out it was possible way before that.
Yeah.
But one of the things that was sort of, I don't know if you call it a workaround, had to do with actual management of the property. So there's things that you can do as the IRA, beneficiary IRA owner, I guess you would call that, and things you can't do that you would normally otherwise do if you owned it outside the IRA, like managing all the activities associated with managing. Would you mind kind of unpacking that a little bit for everyone, and so they understand what the
Sure. Yeah, sure. So if your IRA owns a piece of real estate, right, you don't really, you're not the real property manager. And if you own a property management company, no, that company can't manage your IRA owned assets because you're still providing, personal benefit. But you can do some management duties. For example, you can screen tenants, you can pick up the rent checks and collect them and put them in your IRA, or you can hire third-party vendors to do the work, but you're not going to swing the hammer yourself. That's actually called an over-contribution of sweat equity. How do you like that? So those are the things that you want to stay away from. Hey, I see we've got a question. Should we take it?
Yes. Yeah.
Okay. Catherine said, is there a benefit in converting a self-directed 401k to this type of IRA? Well, if you already have a self-directed account, a self-directed 401k, that's awesome. It can do the same things that an IRA can do. If you have a self-directed 401k, 401ks have higher contribution limits. So you might like to leave it in a 401k, but whether it's an IRA or 401k, they can be self-directable. And what the self-directed, moniker, what it insinuates is that now you can invest outside of Wall Street, not just in mutual funds, index funds, CDs, you can stocks, you can invest in alternative assets. So I hope that answers your question. If not, I'd be happy to go deeper.
Not only that, but you can borrow against your 401k.
Right. Yeah. The lesser of $50,000 or 50% of the account value. Yes. And you have to pay yourself back when you do that. So when you borrow money from a solo 401k, it's sort of a plan asset because you're paying your IRA or make that your 401k, you're paying it back over 5 years, at least quarterly payments at a current market rate. So you're getting some return on that money that you borrowed from yourself. So it's still an asset in the plan. Okay, so Tom says, I thought rental income was not considered earned income, therefore you cannot add it to your IRA. Good point. That's true. So if you personally own a house with rental income, you've got passive rental income personally, that doesn't count as active income toward a contribution. But if your IRA owns the house, right, and there's a rent check, then that money goes back into the IRA. And you're right, rental income is considered passive income, isn't
it? Yeah. The difference is, Tom, in this case, the house is owned inside the IRA. That's what makes the difference. Yeah.
Yeah, it does. It does.
Yeah. Hey, speaking of properties being inside the IRA and being outside the IRA, inside the IRA, if I have a house and I've owned it for, I've had it for 10 years and I'm ready to sell it because I want a bigger property, can I sell it inside the IRA, keep the funds, the proceeds from the sale inside the IRA, and then when I find a new property, could be a year later, just redeploy those funds to buy the new property all inside the IRA, and there's no time restriction like outside the IRA. If you do 1031, it's strict, So
it is. It is. No, you nailed it. That's exactly what you could do. If your IRA owns a property, your IRA can buy it today and sell it tomorrow, and there's no tax hit for that. I think we can
Okay.
see a tax hit personally if we do that, like especially rental property, right? And if your IRA property is rented, because it needs to be arm's length, it needs to be for investment purposes, so it's going to be a rental. You're not going to have to add back depreciation, yay, because you never took any. How many people have gotten stung with adding back depreciation? Ouch.
Yeah, me.
Yeah, me. Yeah. So you don't want to do that. And in an IRA, since there's no tax, there's no depreciation, you don't have to add back depreciation.
Yeah. The other thing too is in a 1031 exchange outside of an IRA, of course, it's all outside the IRAs. It has to be a like kind exchange. Inside the IRA, if I sell a duplex, can I then go and buy, gold and silver or just,
Absolutely.
Okay, awesome.
Yeah.
Okay. So are anybody's wheels spinning inside their heads?
This really does open the door to a lot of different kinds of assets, but also too, if you find a deal and you're coming up short of the cash, and right now loans are crazy, right? I mean, compared to what they were even a year ago. So what you can do is borrow money from somebody else's IRA, negotiate the rate and the terms, as long as it's legal and not usurious. Then you could borrow money from other people, or someone else could partner with you. So forget about the debt altogether and just partner with somebody else. Maybe two people, like an IRA in someone's cash, or two people's retirement accounts, can invest concurrently.
Aha. Okay. All right. That sounds pretty awesome. And here's something else too. A lot of our investors, like I'm a huge proponent of owning and buying and owning rentals long term. As I flipped, I've done wholesaling, done rentals, and over 38 years, the rentals have made far more money than the flips. Flipping's fun, believe me. It's like all the shows are on flipping. There's no shows on rentals. It's all
Yeah.
it's all on flipping, and I watch them. I'm in the business, but what I'm getting at is when you flip a home, remember, guys, outside the IRA, you got to pay tax on that gain, and there's not really too much you can do about that. But inside the IRA, just like we were just describing with the rentals, I could buy a house for 200,000, remodel it for another 100, and sell it for 400. And when I do that, the I guess because you're not paying, you're not doing any real gains. There's no real, it's not, everything's deferred. But how does the remodeling work? Or do people do flipping inside of IRAs? I guess I should ask that first.
Yeah, people sure do, but any expense has to be paid for by the IRA. So that includes earnest money, closing costs, any rehab cost, the property tax, that new garbage disposal when the one blows that you have in the house, anything like that, any repair. All expenses of that asset have to be paid for by the IRA. Now, the account expenses, like the account fees, can be paid personally, but the asset expenses have to be paid for by the IRA.
Did you know that you can participate in class every Monday? We call it Monday Night Live, 7 p.m. Eastern, with me and dozens of other investor agents from around the country, in fact, the world. Every Monday, totally free. No selling, no recruiting, just straight up education on anything and everything in real estate. And we have a lot of good guests coming on once or twice a month, bringing in expertise on subjects like how to buy a house with crypto. Okay. How about them apples? What about AI? How's AI affecting our business? How about the metaverse, blockchain processing? We're already using it in title work. So come on to Monday Night Live. Be ready to take notes and ask questions because it's live and engaging, and you get to participate by asking questions and meeting others. So we'll see you there. Go to GaryRealEstateWithGaryWilson.com, click on the resource tab, drop down, and you'll see Monday Night Live. And in there, you can see one of the most recent classes. But more importantly, you can register for class as many as you want going up to like the end of the year, I believe. So in any case, do that. We'll see you on Monday Night Live. Look forward to meeting you in person. Take care. Okay. So that's literally everything's inside the IRA. And when you sell it, essentially the extra $100,000 net profit from purchase plus the remodeling, that stays in there. And you don't, as long as it stays in there, there's no tax burden. It's only when you start taking it out and you got to your 70 and a half, you start taking it out.
Well, you know what? And that's interesting that you bring that up because in 2019, the 70 and a half thing changed and not everybody knows that. So I'd like to touch on that if I could.
Yes.
There was a something called the Secure Act 1.0, and that changed. It was in 2019, changed the RMD age, required minimum distribution. You have to take a certain amount of money out of your account. Changed it from 70 and a half to 72. But then at the end of last year, Biden signed, like on December 31st, Secure Act 2.0, and that changed the age to 73. So now it's not 70 and a half anymore. Now it's 73.
Now, if I was Biden, I would have made it 80. I would have made it my age if I was president. It's going to be, if the guys vote for me, I'll make it 80, you know?
Well, and in 10 years, so in the year 2033, it'll be 75. We have an article. I'm going to put this here in the chat if you want to look at that article. It's about our required minimum distributions.
Okay.
But it's nice that we see a change. The government is acknowledging that we do live long. And so they're stretching out that age.
Yeah. Okay. Well, that's pretty awesome. I like the idea about flipping because if you think about it, you're literally taking every penny of profit and able to roll it into the next property, which means you can grow a lot further, a lot faster inside the IRA. Yeah.
One I should mention too, when you do buy real estate with an IRA, is that you need to leave like a 10% pad or cushion in that account for expenses, because you don't want to get stuck. You don't want to have an expense. We need a new roof, but there's no money. You do yourself a favor. Otherwise, you have to sell the asset, and that's not the point. So you need to leave some cash in.
So I guess that's a reserve. I would call that a reserve.
Yes. Reserve funds. Yes.
Now, is that something the banks require, or is that like in the IRS code saying, hey, we should have?
It's not the IRS code. It's just a good idea. If we're going to custody a real estate asset, we require a 10% holdback, 10% left in there, because there are just too many problems. And then what people will do is abandon the asset, and then we're on the hook, partially on title, saying, as an owner of the property, which we're not. But it doesn't mean that the people at the taxing authorities are sophisticated enough always to know that the custodian is not the owner. And then we can't get our name off the asset when we have no ownership interest in it.
Yeah.
So
something you just made me think of, Kaaren, is the different roles that are played in this arrangement. I mean, you have the custodian. Would you mind just going through the key players, like the roles and the definition of those roles? Everybody, this is really important. You pay attention to this next part. Okay.
I had a slide for that, which is talking about the players in the game. So there's the account holder, and they're making all the decisions. They're driving the bus. The IRA itself, or the solo 401k, that's their tool, like their investment tool to use. And there's UDirect IRA Services. We're a third-party administrator. And again, when I founded the company in 2009, I selected a trust company custodian to do the cash management. Their employees are bonded and insured against theft and fraud. So our UDirect account holders, we have the money there at American Estate and Trust, and they're in Nevada. And now we're in our 15th year working with them.
Okay. All right. So the account holder, that would be like me or Kaaren or Eric.
Sure.
We want to invest. We want to do it inside of our IRA with the account holder. Then you're you direct this the custodian. Is that right?
We're the third party administrator. The custodian is technically the trust company, right? But we're the ones, we're the ones driving the bus here. It's sort of like it's kind of a bad analogy because we don't have yes, we're the direct point of contact. Let's put it that way. But it's like an insurance company. If you have an insurance agent and you get into a car wreck, you call your agent, you don't call Wisconsin where they're, pushing a bunch of paper. We don't have an agency relationship or any kind of, what do I want to say? Any kind of relationship like that. We're two separate companies just working together, like with a joint marketing agreement.
So the trust company. Okay. Gotcha. Now, so if we have if I have just a 10-unit building inside the IRA and it needs major capital improvement, like a new roof, for example.
Yeah.
Do I have to? Is there paperwork? Is there a process, a predefined process we have to follow? So if we ever get audited, we're following all the rules. It's been a while since I looked at this, but it seems like there was something there. And we have to go through you. How does that work if we have
Yes, well, the IRA money or the 401k money has to pay for that expense. You could maybe even take on a debt partner to help you with that expense, for example. So in that case, there might be a note involved. But otherwise, it would simply be submitting an invoice, say, for example, from the roofer.
Okay.
And then, or maybe you know how when you're in construction, you pay them as they do the work. So then you would submit those. And we have an online platform where you can submit your requests.
Okay. Okay, good. I think I saw another question or two come in. Let's see. Here's the UDirect. Thank you for that. The rules are yours. Oh, here it is.
Gifting.
I thought I saw one from Anna. Where's Anna's question? Maybe it was in the Q&A box. Nope. Anna Galumi, did you have a question about gifting, or is that someone else?
Catherine.
Oh, here it is. It's Kathy. Kathy had the question. I'm sorry. What about gifting of funds? Are you allowed to do this kind of thing through an IRA or 401k?
No, gifting is your personal money.
Okay,
What is
gotcha.
the cap now? Is it like, I think next year it's 18K or something? I don't give tax advice, but I do have kids. So I think it's like 18K.
Yeah. I tell my kids it's still 10.
There you go. Yeah, you're
I just
smart.
said, yeah, the bank of daddy's closed, but okay, and
And you know what
Tony's
MOM
asked,
stands for?
Mom, no,
Made
what's
of
that?
money.
Made of money. Oh, there you
Made of money. MOM.
go. I like it. Yeah. Let's see. Tony is okay. So as a real estate investor, the challenge will be finding the private money and building that relationship. Um, so Tony, do you mean raising the money to purchase the property?
We're just raising capital in general. I mean, yeah, raising capital is a relationship situation, but that's why a lot of people, you know, come to the program, you know, events like you're having right now, Gary, you know, so everyone can get to know each other. Since COVID's over, we can go meet in person. We can go to meetup groups. We can go to conferences. I've been to a lot of conferences this quarter, like Bigger Pockets and other ones, where people get together and then you can meet and you know, do business. Great
Okay.
networking opportunities.
Yeah. Um, let's see. Tom, all paying your fees, those not have to come from your IRAs. Is that correct? Those your fees are annual fees.
Yeah,
Tom,
we have an annual fee, yes, and you can pay the annual fee and of the other fees, of the account fees, you can pay personally. They don't have to be from IRA money. They can be from your personal funds.
Okay. Okay. Let me just check here and see. Okay, we got two people that are on audio too, but they're unmuted. Okay, guys, any other questions or thoughts?
Can I ask questions?
Yes. Les?
Um, so I wanted you to tell more about what happens when we run out of money in the account, when the house runs out of money.
Right. So, and then you've got an expense. Well, what you can do, I think the first line of defense might be to make a contribution. Every different kind of retirement account has different contribution rules, slightly different.
So we've been doing that for 5 years.
Okay. Contributing.
Correct.
So if you have a shortfall, you can contribute to make up for the shortfall. Maybe your IRA has an asset, but then maybe has like precious metals in it too, or some other asset. You could sell that and use the proceeds, you know, to make up a shortfall. If you have a 401k from a previous employer, could roll it over, or an IRA, you could transfer it, or take on a loan, or just sell the asset. Those are your choices.
So, Les, is the property inside the area, are the rents not keeping up with the expenses, or did you just get hit with some things you didn't expect, furnaces and
It was vacant for
roofs
5 years.
Oh, okay. Well, that would be a lot of lost. Are you able to rent out now, or does it need to have stuff done to it to make it rentable?
The tenant moved in May. She hasn't paid any rent yet.
Holy smokes. Okay. Set up a call with me. There's other things. I'm gonna give you some information. You don't have to pay for any of this. I mean, you're guest in a class, and I'm sure you're a guest from someone that's on the team. But the team member is allowed to share with you some of our material. And if you got a situation like that, I don't mind at all having a discussion with you to help you maybe see um, some solutions to solve that, and then we're back to the IRA thing after that. Um, I don't mind at all if you want to do that. I'm happy to do it. And who raise your hand? Who's been a situation like that before where you had a rental where somebody wasn't paying the rent? Yep, me, Tom, Kaaren. It is no fun. It's very stressful. But there are things you can do. You know, so actually, blessed. If you don't mind me asking, what state is the property located in?
It's in Connecticut.
Okay. Um, Eric, are you aware of any? Is anything going on in Connecticut right now that would prohibit her from taking action, like any leftover moratoriums and things like that?
No, as far as I'm concerned, my attorney said about 45 days for an eviction.
Okay. All right.
And as of December 1st, we can't evict until May or March. December through March, no evictions.
They do that up in Canada too. Yep. How long does it take to get a court date there?
So she's in eviction now. I have it right on it.
Okay. Yeah.
She has until 4 days to move, or I don't know what happens after that 30 days, but it's 4 days before she has we can't evict until March, till December. It was 4 days before December. So it's 26th of November.
Okay.
Is her date.
Well, typically you first have to provide a notice to quit unless your lease waives that, your tenant waived that right when they sign the lease.
No, she has the 30 days. Her notice to quit happen. She has to quit by the 26th of November. She has until then.
Okay. Now, have you actually been to court? Have you actually had a hearing?
No, that's just the notice to quit was 30 days.
Right? That is a long one. Yeah. Wow. Okay. That's a long notice to quit. Yeah, definitely set up a call. Bless, did someone else on the team today invite you? Because I've seen you before in class. I'm glad to have you in class.
Eric.
Oh, Eric did. Okay. Yeah. Hey, Eric, we can share anything that Blessed needs. Okay. But feel free to set up a call and let's walk through things and see what our options are. So, by the way, guys, just notification. I first saw that up in Canada, in both Quebec and Ontario provinces, where in the winter months they actually would let you go and you could get a judgment, but you couldn't act on it. You couldn't execute the judgment during the winter months. And guess what else you have to do up there? You get to pay the heating bill for a tenant that's not paying rent. And I'm not trying to sound cruel. Believe me, I want everybody to be warm in their homes, but my philosophy is it doesn't make sense to make two poor people, right? If you got a problem, solve the problem. You don't solve the problem by creating another problem. But some of the northern states have started doing this also. So just be aware. That's why so many money, if you look at the maps of the migration of money, where's it all going? Florida, Georgia, Alabama, Mississippi, Tennessee, North Carolina, South Carolina, Texas, right? The rules are more owner friendly down there than they are in most of the northern states. I'm not passing any judgment or making any political commentary. These are just facts. There's a publication you can get that gives you all of these facts. It tells you what the rules are and the laws are state by state when it comes to property ownership and owner rights and tenant rights and things like that. And you need to know those things to make good, informed decisions. Nowadays, investing out of state, I think I mentioned this the other week, 56% of real estate investments are actually out of state now. 56, that's over half of them. People are investing out of state because they have guys like you on the team in 37 states, and they have comfort knowing that they can invest in 37 states, and people that are trained the right way and have the right information and right skills and talents and pools. So sorry to get off on a tangent there. Let me check I know we're past date here, guys. I just want to make sure let's see. Free report. Oh, thanks, Kaaren. Brittany's asking, what is better life insurance? Or what is better, life insurance or IRA? So I'm
That's a
not sure if
question to
you're.
ask your financial advisor.
Yeah. Um,
I
yeah.
have
To
both.
me, that's two
Yeah.
different. Yeah, two different purposes. So in any case, Kathy's asking, I haven't, but I had a good friend who had that happen. I'm not sure what. Oh, that might have been related to
Yeah.
someone not
Mortuary.
paying rent. Yeah. Um, okay. Hey guys, so as usual, I'll stay on, till 8:30. That's another 25 minutes if you have anything to discuss. And Kaaren, you're welcome to stay on with us. I like to leave it open for Q&A at the end, but I'd say, guys, while Kaaren is here, don't be shy. I mean, you've got the person to ask questions to directly on the subject. And I guarantee you some of your investors have either done this or have thought about it, you know?
Well, if you guys would
So,
like to email me, it's info@udirectira.com. And I've got an appointment, so I'm gonna scoot. But thank you so much.
okay.
I really appreciate it.
You're
Thanks,
welcome,
guys.
Kaaren. Thank you for doing this. I appreciate you.
Yeah.
I know how valuable time is. I appreciate it.
Have a great
Thank
night,
you for
guys.
your time.
Okay. Okay. Um, let's see. Let me go back down here. Um, okay, I think we're done with the questions. Do you guys like that? Is anybody here a little bit in the dark, not even really sure? Um, what you understand the concept, but you don't really understand the application of it. Because this was the quiet. I don't think I've ever seen it quiet. That
So
just
Yes, I understand the concept, but not the application.
really what the application is. We're trying to always find solutions to ownership that give us the greatest potential to earn more money and the greatest potential to reduce expenses, particularly taxes. So when you put a property inside an IRA, rental property, all the rents generated inside the IRA are left inside the IRA. You don't take it out because remember, you don't take money out of an IRA till you have to be 59 and a half and no later than 72 now. So what that means is all that money is accumulating in there and you can be redeploying it to buy other income producing assets like gold and silver, notes, tax lien certificates. There's a whole list of things you can do inside a self-directed IRA. And all that growth occurs it's really not tax free. They say tax free, but you're not paying taxes on it while it's growing. You don't pay taxes till you start pulling money out. And it's only whatever you need to pull out. It really, at that point, has nothing to do with how much you made. You could start off with $1,000 in an IRA, but if you keep flipping homes and buying rentals for 50 years, you turn it into $1 million. That's a huge capital gain, but you don't pay capital gains. If you pull out $1,000 a month in your retirement, you only pay your tax on the thousand that you pull out at that time based on your current income bracket, you know? So theoretically, if you're in your 70s, you won't have your day job anymore. You'll be essentially retired, so your income will drop dramatically. Then you rely on your investments, and that's what this is. So theoretically your tax bracket would be lower when you're 72 years old. Um,
So,
versus
Gary,
only
not only is this advantageous for us if
mm,
we're investing ourselves, but
yeah,
obviously and I have homes in my 401k. However, it's
right,
also good to know because this is a tool that we can use with investors that we
yes,
are helping to purchase properties as well because
yeah,
a lot of people they may not have extra money, but they have extra money in, 401ks or IRAs or whatever. And this is a great tool.
yeah. Well, that's
Sorry to
really what I want to
interrupt
have.
you.
No, that's fine. This is why I wanted to have Karin on. It's not for us to become experts in this subject, but to understand the concept, right? And when you're speaking the prospects and clients about investing, inevitably, a lot of them are going to say, man, I don't, if they don't know what they don't know, and they think they've got to have, hundreds of thousands of dollars to buy real estate, and it's really not true. Um, some of those people may have 401ks and Roths and IRAs and things like that. They can be converted to a self-directed IRA, giving them the capital to invest in a tax-deferred vehicle, and it basically is protected. By the way, speaking of protection, here's one of the best things about owning property inside of an IRA. It is the greatest form of protection that we have in the tax code and the legislation. If somebody sues you because you got in a car accident, they can attach your anything you own personally, your home, whatever, your cars, things, boats, things like that. But anything inside your IRA and the 401k is protected. They can't attach it. They can't touch it. You know, so
Isn't it
that's
also protected in your LLC too?
No.
To a degree. The LLC
No.
gives you some liability protection, but the asset inside the LLC, if somebody slips on your front porch, on your duplex inside your LLC, they can attach the property they can attach anything inside the LLC. So if you have an LLC with 10 properties and somebody sues that LLC because the LLC owns the property that they slipped at, they can actually attach all the assets inside that LLC. So, yep. Another really bad thing, Kendra, believe me, I have LLCs. I got 5 of them. I've owned probably 7 or 9 or 12 over the years, but I use them for the anonymity so people can't associate me directly with ownership of any assets. And I also used to put multiple assets per LLC as long as they were related. But um, there's something called piercing the corporate veil. So when you own an LLC, you have to make really dead certain anything that goes on inside the LLC is using a separate checking account, separate everything. You cannot commingle funds. You can't take money out of your LLC and just go buy a car. And you can. There's no law that's going to stop you. But if you keep doing that stuff and you use your LLC to pay for dinners and go out and pay for vacations directly, and you get sued, the lawyer's going to say, wait a minute, the LLC is really Gary, it's really Kaaren, it's really Kendra. Kendra really is the LLC. She's using it like it's her own personal checking account. And they will attach all your personal assets too. So LLCs are definitely far from perfect. They're a great part of an overall plan, though. I hope I didn't scare you.
No, thank you. That makes sense. So true protection is having the property inside of a self-directed IRA then.
That's one form. Another great way is using trust accounts to own property.
I'm not sure how it works with the IRA, but I know I'm a trustee of my account for my 401k.
Yeah.
That is in a trust. Anyway. Yeah. And just for everybody's benefit, I mean, I won't get into anything, but you can be sued in your LLCs even if you haven't commingled, and it doesn't protect you. Trust me.
What is their minimum amount recommended opening up a self-directed IRA?
It'd probably really be up to the institution you're banking with. And in most cases, you can probably start with $1,000, So, yep. By the way, a self-directed IRA actually technically is a trust, because when you look at all the fine print, it's going to say in trust for, right, for the benefit of you. By the way, there are lots of different kinds of trust. It's a whole different subject. We can bring somebody on to discuss that if you want, but the one that's the greatest form of protection it's called a complex trust. And I'm not a lawyer, I'm not an accountant, but one of the features of it is it's irrevocable. What that means is you literally, ethically, legally, and every other way, give up ownership of the asset through the trust. In a revocable trust, which is a living trust, you don't do that. So a living trust doesn't actually give you that kind of liability protection. And a revocable trust will. But you have to really know what you're doing and talk to the right people before you set one of those up. They're expensive. But those are the kind of trust that the Kennedys use and the Clintons use and the Rockefellers and stuff like that.
So my complex trust is like a 1031 exchange and a Roth combined. You get the benefits of both.
Yeah, complex trust, there's more to it than that. It's actually pretty compelling. I mean, if you guys are interested, Google or look up, I'll give you the full phrase here. It's non-grantor,
right?
Discretionary, right? Irrevocable,
Yep.
Spendthrift,
Yep.
Complex trust.
I got it.
That long.
I got it.
It uses IRS code 643. You can look up IRS code 643, and that's what it uses. Here's the difference. Most other trusts follow the body of law called trust law. This trust I'm describing follows contract law. It's actually a contract. It's a business contract. Okay. So in any case, definitely way beyond my pay grade, but we can find somebody that can talk about that. And that's let's see, Tom. Let's see, Kathy, you can invest in these. Let's see, Gary, I think it's important knowledge that you don't report the rent income from that property on your 1040 unless you take it out of IRA account. IRA financial management company, that is the one responsible for report to the IRS. Yeah, so yours, any rents that you earn inside of your IRA, you don't report that. Remember, it's not a taxable event. It's think of that as the goose laying the egg. Okay. But at the end, when you're going to retire, you're not pulling the eggs out that the goose laid. Those eggs have been converted to cash that you're pulling out for your living expenses. It's that cash that you pay taxes on as you pull the cash out. You're actually leaving the golden goose inside the IRA. You know, when you start pulling money out, remember there's a wall there. Okay. So Brittany's asking, will you put that in the chat? Let me type in this. You guys, please remember, I'm not an attorney. I'm not an accountant. This is just what I've learned. Okay, from a couple different sources. So it's irrevocable. Oops. Please don't judge me on my spelling. Let's see. Discretionary, thrift, spendthrift, excuse me, and irrevocable, discretionary, spendthrift, um,
Grantor.
non-grantor, complex trust. Irrevocable, discretionary, spendthrift, non-grantor, complex trust. I think that's it. But look up here. I'll put this in there. IRS code 643. So
I
you
would
can look that up.
Grantor and I thought non-grantor was in the beginning and irrevocable was towards the end, but I could be wrong.
No, I don't think it matters. I've seen it like 7 different ways. As long as all those words are in there.
Right.
And when you have a trust document, there's different sections that describe the legalities of each of those terms.
Yep.
The main thing is every one of those has to be described and laid out or referenced inside your trust. You actually referencing the IRS code inside the trust, because if you don't, it's not going to be applicable. You can think it is, and you can say, hey, this is irrevocable. But if you don't actually spell out what irrevocable means inside the trust and reference the specific code, it may not be enforced if you ever had some kind of a lawsuit, excuse me. And you actually have to reference specifically IRS code 643 also. Yep. Okay.
Question about we're talking about a slip and fall in an LLC. Now, if we have a slip and fall in a property that's in the IRA, what happens?
Well, that's a good question. I never had that happen, but I do believe
the whole IRA, I believe, is at risk.
I don't think so. I think the only thing I do know this, the only thing that can be attachable inside an IRA is the specific asset in question, like the house, for example. But if you had 10 other houses, they're all protected. It's just that one house could be subject. but I've never heard of it being attached in a liability claim. The only reason I've ever heard of property being attached is for a financial claim, a debt claim, right? Because if you think about it, a debt claim, somebody gave you a non-recourse loan, but there's a debt instrument, and it references the property, right, and which is inside the IRA. But if someone falls on your property, and I've had that happen on properties outside of an IRA, and they were inside of an LLC, and they could only attach anything inside the LLC. But the reality is, it was an expense for the LLC. So as long as you hey, like here's the way it was given to me from my attorney. He said, your first line of defense is you're a good landlord. You take care of your properties, you pass the inspections, they're up to code, and safe, clean, and reliable. If you're good there, you probably never have a problem. The problem is there's uh, enterprising litigators out there. What that is people who sue to make money. They know they don't have a case, but they also know they can get you to cough up $5,000 because it's cheaper for you to cough up $5,000 than to pay an attorney to go to court and fight them. So, but back to the original question, it's my opinion. This is, again, I'm not an attorney, but we'd have to check this out with Kaaren or an IRA, self-directed IRA expert. Is someone had a liability claim? Is it simply an expense that would have to be paid, and that can be paid then outside of the IRA? Or are they able to attach the property that they slipped at inside the IRA for a liability claim? That I don't know. So we have to find that out. But again, in my experience, the only time I've ever seen an attachment inside an IRA was for debt, not for anything like a roofer didn't get paid or any kind of thing like that, or somebody flipping and falling.
I have another question.
Yep.
It sounded like you're saying, so what's the question?
Oh, I'm sorry. I'm so thirsty. I'm drinking water.
We cannot rehab the properties ourselves. We have to hire the rehabbers.
Correct. Yep. Now, Kaaren didn't mention this, but there is an exception. And the exception, I believe, is a 10% thing. So if your expenses amounted to, $500,000 for one property, you could, through another LLC, pay your LLC 10% of that, which is $50,000, like as a management fee or something. Now, don't quote me on that because I don't know the specific rules, but I know that can be done. I've seen that done before. There's like a threshold or a limit. Yeah. Good night, Henry. Good to see you, buddy. Okay. Any other questions? Or this is an advanced class tonight. Yeah. Normally, you wouldn't have these discussions with consumers. I mean, we're all in the same team here. We're not nobody's buying or selling a property, but if you were working with a consumer, I would absolutely have them talk to an expert. And by the way, I highly recommend going to your local investor club and finding out who those experts are. Every investor club has somebody, an attorney, an accountant that does these self-directed IRAs, knows how they work, and find out because this is a calling card for you. This is a great way to get a conversation going with someone who's used to regular agents who can't even have these discussions, right? Typical agents who are not trained to understand the terminology and methodology of real estate investing can never have these discussions. And here you come along and you understand at least the concept of a self-directed IRA. They're going to put you way on top of the pedestal, ahead of the rest of everybody else. So the time of year couldn't be better either. So, hey, I got a question for you guys. Show of hands, raise your hand, or if you're got your screen blanked out, you can do the hand raise on the Zoom. Who has called at least one person? You can call a cold calling if you want. I don't call cold calling if you know the people. Called one person that you know about real estate and gave them something, a market report. Thanks, Michael Koppel. Appreciate that, man.
What time, Gary? Within the last month, week, day?
Yeah, you're exempt, Vanetta. You're
Say,
exempt.
say it again.
But you're exempt because I know you were out. So
Okay.
yeah. But I was going to say in the last, how about the last 3 weeks? The last 3 weeks. So Tony, it's good to see you back, man. Kendra, Anna, Vanetta, Tony, Eric. I know Andre is calling people all day long, you know. But guys, that's what it takes to get the deals right now. And I'm going to tell you, I interviewed somebody today, and I'm going to have Beverly take out the short section. This guy's an investor in Chicago, and he works with investors. Um, he pulls together funds to buy industrial properties, and he said he's never done anything other than cold calling and door knocking. He would go to these industrial sites and just not give up. He refused to leave till he talked to somebody in charge. And just an amazing story of success. So that's just what it takes right now. And I'm going to challenge you. You know, don't be shy and don't sell yourself short. I think if you make 10 calls tomorrow, you're going to be pleasantly surprised, right, at how those conversations go. You might only have two conversations, right? But one of them is going to be like, you know what? I didn't realize you did that. That's what happened to Ben Fanuel. He used a booklet and talked to two people, and both of them was an uncle. He had no clue that Ken was doing this. And he's got a portfolio he wants to sell. He's in his 70s. Another guy was a friend, I think from college, that wants to, he's already an investor and wants to start a portfolio. All that because he did that one thing, you know? So, in any case, uh, who here would like me to lean on you more? Like you feel like you need more Gary grabbing you by the shoulders and shaking you to get things done versus you like doing it the way it is where I challenge you and it's up to you to step up to the plate and swing the bat. Who likes the latter? Who likes me just challenging you? You stepped up to the plate and swing the bat. Swing the bat. Who likes that approach? Okay. Who's wants me to grab you by the shoulders and shake you? I mean that metaphorically, of course, to get things done. So Bonetta raised her hand, and Michael raised his hand again. Yeah. Uh, I don't mind. You know, I tend to take the latter approach because that's my style. But if you need that type of football coach in your face type coaching, I can do it. You just got to tell me and give me permission, but I'll lean on you. Okay. I know the time of year we're in. I know what the market's like, and I know what the volume's like, and we have to do these kind of things to beat the competition. Don't be average. You're none of you are average. You're here because you're above average. I mean, check this out. There's 21 of you left out of 27, right? These are the hardcore people that want to succeed. I mean, raise your hand if you are really, really frustrated with the way things have been and you want to deal like right freaking now. You want to deal to like when you wake up, you want to deal. See, there's Brittany, right? All right. You got to set up the calls, guys, right? That's the mechanism I have to work with you. Use the strategy call link to set up your calls. You can call me on the fly and I will call you back, but I might only have 10 minutes or 15 minutes or something. You know, I'll ask them, give me a fighting chance, and that requires you to step up to the plate, and you got to make the call. You have to, if you're not calling anybody else, then you need to call me. Set up a call. If we have to get on a three-way and call people right together, that's what we'll do. You know, that's where we are in the market. And those that do, not only survive, you'll thrive. You'll come out of this thing. Believe me, I'm personally experienced this. When the market's heading into correction, most people will shrink up and shrivel away because that's what our amygdala is telling us to do, right? The people that succeed, the 20%, right, are using the frontal lobe, right? That's where all creativity and imagination comes from. And they tell themselves, I imagine if I call enough people that I'm going to get a deal. That's where it all starts. So be be a frontal lobe person. Maybe we'll come up with a new nickname. Who's the frontal lobe people? But you know, just do it for yourself, do it for your family, right? Don't do it to impress me. My job is to be your guide. You're the hero. Remember that? You're the hero and I'm the guide. So be the hero, be the lion, let your light. Some people have inside lines, some people have outside lines. Doesn't matter which line you are. Everybody's got a line. Like, let's find out which yours is. Set up a call and we'll do that. Okay. Yep. Go ahead, Anna.
Well, it's actually Anna's friend here, Jeanette, but I have a question
hey,
for
Jeanette.
you. Hey,
how are you?
I'm doing okay. I hope I'm going to be better after you answer this question. But who do you recommend we call if we have absolutely zero sphere? Like expires, FSBOs, or what are you thinking?
You have zero sphere?
Practically, yes. Move to a new space.
Are you on an MLS now?
Yes.
Okay. Definitely set yourself up for expired search so you get notified the second anything goes expired on your MLS. Okay. That's a must. And how are you comfortable on the phone? Like if you pick up the phone, you can call somebody and like dancing, you'll figure out how they're moving and everything?
Sort of. I think the problem that I have is before the phone call, actually sitting down and holding myself accountable. So that's my biggest problem. But I think when I pick up the phone, I could just have a conversation with someone.
Yeah. It actually happens naturally. That's the craziest thing about all this, guys, is we actually psych ourselves out. All that fear for nothing. Once you get on the phone, here was the test of this. Once you pick up the phone and you get through the first 60 seconds of the jitters and the discomfort, doesn't a conversation normally take on a life of its own? Every single time. Very rare exceptions. Okay. Jeanette, another thing is this. There's a website called forsalebyowner.com. Okay. You're not going to get all their contact information, but you'll get enough. You're going to find out who's trying to sell their house by themselves using that website, and you can reach out to them. We have a skip tracer on our team. Anna can give you her name's Ansa Khalil. We can give you the link for that, and you can send Ansa, your list of people for 3 cents a person to give you the phone numbers and emails. So if you give her 100 people, that's like $3 or something, and I think there's a $20 service fee or whatever. It's not much, but do that. But also, if you want to set up a call with me and Anna, or just by yourself, Anna will give you the link for that. I can promise you've got a sphere. And the only reason I know is because I said the same thing almost 22 years ago to my teacher, because I came out of computer science in a bank. I was on computers, and I didn't get out to see people. So I didn't know anybody. And I had just moved. I literally had just moved. And my teacher said, promise you do the exercise. You'll come up with between 200 and 300 people. And I did. It took me a month, but I did. So I don't care if they're in Texas or New York or Montana or wherever they are. If you've got people that doesn't matter where they are, they count. And we're going to show you how you can make them count. Okay.
Okay. Thank you so much. I definitely feel a lot better.
Hey, Gary, I got a question for you. Gary?
Yes, ma'am.
How you doing?
I'm doing good. How are you doing? Good call today. Hey, I think
Lynette is on. She's on.
Lynette is on. Yes, she's right there. You are. Hey, Lynette.
So this is my question for you. I get these texts sometimes from I've signed up for all these different investor sites, and I get these texts saying they have a 3-bedroom something, and they want to sell it, and they're willing to pay 3%. Can I advertise that on? It's not on the MLS because they're off-market deals. Can I advertise that on my on Facebook? I have an investor Facebook page.
Yep. Here's what I suggest. Now, every state can have its own unique rules about this, but at a minimum, that owner of that property, you can tell us, look, I'm going to promote your property. I'm going to do it the right way. It won't be on the MLS. I'll do it off market, but I need your written permission to do that legally. In every state, you need written permission from the owner to promote a property. Okay.
Well, it looks like it's coming from a wholesaler. It doesn't look like it's coming from. It's coming.
Yeah, that's okay. Yeah, it really doesn't matter who it is, but they. Oh, wait a second. No, if it is a wholesaler, that's right. It's not the owner.
It's not the owner.
Yeah. All right. Here's what you can do. Here's what you can do. Do you have any information on the property at all? Picture. What's that?
No, usually it's like a text, and they, sometimes they do have those. They do have some like a link in there.
Okay.
And I can open it up.
All right. So we've probably just given you 3 bedroom, 2 bath ranch, 200,000, something like that, right?
Uh-huh.
All right. You can use that. No property description, no address, nothing like that at all. Just say, great investor deal, whatever they're giving you, the description without the address, out anything else. Um, you can do that and have people call you. But I would call that wholesaler and let them know um, what you're doing, and they need to be willing to, they need to show you how they're going to be paying that 3%. And if they say yes, I can prove it, then have them do at least a showing agreement, right, or a broker compensation form, not a listing form, just a simple 1 page. That if you sell that property, you're going to get 3%. Yeah,
Got it.
and then you can bring in your buyers. Yep.
Okay.
Let's see. Brittany's asking, who do you call when you've exhausted your sphere? Same. Do you recommend sellers or buyers if you have little budget? And can you also use directskip.com? They provide 500 free skip traces. Yeah, Brittany, if you have a resource like directskip.com, you want to utilize that? Absolutely. We really don't dictate who uses a skip tracer. We just know that we've all used Ansa for 3 years now, and she's done a wonderful job and the least expensive I've ever seen. I mean, in most cases it's 10 to 15 cents a person, and she does us a really good favor there. Let's see. Right. Let's look for some suggestions for Brittany, guys. She's called her sphere. All right. Um, you could also, Brittany, you could use uh, Really Flow to find the owners of properties, again, like long-term owners who are behind on property taxes. Get that list, send it to Ansa Khalil. They get the emails and phone numbers. Then add them to your database to PageRecore, okay? And start communicating with those people, right? It's bold action, but there's a kind of stuff that's required right now. And Brittany, how many contacts have you identified? How many contacts do you have? Let's see if she's still on. Oh, I don't see her anymore. Hey,
I'm
Brittany
here.
Taylor,
I'm
there
here.
you are. Yeah. How many?
Um,
Yeah.
I've probably reached out to like close to around 50 people.
Okay. Set up a call with me so we can go through the exercise. I'm going to show you how you identify a lot more people.
Okay.
You definitely got more than that. I can, I can promise you. When I first did this, guys, I told my teacher, I said, I'm like, I think I know 20 people, you know, and that was what I really believed. But when I went through the exercise, there was a lot more than 20 people, closer to 300, you know. But please set up a call with me, utilizing Facebook too and Instagram and things like that. Hey, hey, Brittany, definitely set up a call if you're not utilizing social media. Um, I'll give you we'll go over some stuff there also in a one-on-one. So, okay, let's see here. For text like that real, I would think it's a scam. The only way to know is to talk to the person on the text. Now, remember, Bonetta joined these groups. So she did that knowing that she will be getting these text messages. But if they were coming out of thin blue air, or the thin blue air, is that right? Thin air, excuse me. Um, yeah, I would be skeptical too. But if you join these groups and you're starting getting messages from them, then that's probably okay. It doesn't mean it's not a scam, but at least it's, you know what the source is. So, okay. Anything else, guys? Okay. Well, my voice, as you can tell, is getting pretty shot, but I just want to thank you all for participating. Um, you know, it means a lot that you're here as a teacher, but also I know from experience that if the people that engage and communicate and take action, they get results. And the biggest thing you can ever do for yourself is when you wake up, I mean, I'm telling you, just keep swinging the bat, and if you don't know what to do, call me, text me, I'll get back to you. All right. But there's always something you can do. The key is you have to hit the ground running, right? That's why we spend so much time beginning of every year doing the vision. We do the vision exercise, and we do the goals, actions, and plans. That way, throughout the year, if you find yourself thinking, gee, my appointment's got canceled today, I've got 3 hours, that's not like free time to watch TV, right? Now, if you got family, children, parents, yes, spend time with them. But if you need to work, you can go to your actions database and pull up at least 10 or 12 different things you can do on any given day, right? That's one of the hallmarks of success is having a plan that you can come back to any given time, no matter what happens to your day, pull down your action steps and keep plugging away. Okay, I guess that'll be my final preaching moment for tonight. So I'll see you guys on your one-on-ones. I'll see you next Monday. Dana Truman's coming on to talk about expireds. So Jeanette, if you're still on, make sure you're on next Monday night. And Dana Truman's going to talk to you about expireds and how he made a living off working with expireds. I'll be on the road. I'll be on the phone on the call, but I think Tom, my cousin Tom, is going to initiate the Zoom call, and I'll just be narrating from my car. And then our monthly team meeting is also next Wednesday, the 8th. Definitely be there. Anna Galumian's going to come and do a segment for us, okay, on our team. And I got a few things to go over with you about a big event coming up that we're doing for everybody on the team in January that you're going to be able to, everybody will be able to participate in and bring people in and that you're looking to attract. Okay, so make sure you're on next Wednesday night. And I'll go ahead and give you a heads up now. The day before Thanksgiving on Wednesday, November 22nd, I leave for Germany for 11 days. I'll be back on Sunday, December 3rd. So during those days, I'll be 6 or 7 hours ahead of you. And it is my dad and brother and sister. So I'm gonna, I'll be able to return emergency calls, but anything ordinary routine, definitely reach out to each other. And then on the workplace page, put your questions and things there so people can chime in like Gina and Rob. And I mean, there's other people on the team too. They're well qualified. So just remember that. Okay, you guys ready to go?
That was a good one. Thanks, Gary. Have a good night.
Yep. You guys all have a good night too. God bless you and your families. And I'll see you on the next call on Monday and the next one-on-one and the next team call next Wednesday. And all the guests, you're welcome to come back again.
Thank you, Gary.
You're welcome, Kendra. Good night, everyone. Good night.
Thank you for watching this episode of Monday Night Live. Be sure to subscribe to our channel and go to realestatewithgarywilson.com to join our community and start building wealth today.